Zomato's much-awaited IPO will open from the 14th of July till the 16th of July at a price band of 72 to 76 rupees. The offer will raise 9,350 crore and will value the company at a market share of around 58,000 crore. Should you invest in it? Here are 3 factors to consider. Factor 1. Core business. Zomato's core business is of a technology platform that connects customers, restaurants and delivery partners. It plans to build a business over 4 revenue streams: food delivery, dining out, Hyperpure, which supplies raw materials to restaurants, and Zomato Pro, which is a loyalty program. At present, the food delivery business is the primary contributor to its top line. The revenue model is based on a commission or a take rate that Zomato retains out of the gross order value made by the customer to a restaurant on its platform. In FY 2020-2021, the company made around 62 rupees per order on its platform. This excludes the delivery charge billed to the customer, which is fully paid out to the delivery partner. The average order value increased by 37% in the fourth quarter of FY 2020-2021 to 395 rupees. But its gross order value fell by 15% in that year. The entire decline cannot be attributed to the COVID-19 pandemic and its lockdown, which is our second factor. Zomato reported an operating revenue of 1,994 crore in FY21, which is down 23% compared to FY 2020. The company attributes this decline to COVID-19 and the related disruption, but the extent of the fall is worrying. After the initial lockdown last year, app-based platforms saw a significant structural benefit as more people embrace digitalization. For example, the revenue of DoorDash, which is a US-listed food delivery company, grew by 226% in 2020. Zomato's EBITDA and cash flow are negative in recent years, including FY 2021. There's another factor at play here: competition. Zomato is one of the leading food services platform in terms of the value of food sold. It is present in 525 cities and has over 150,000 active food delivery restaurants in its platform. But when it comes to market share, Zomato and its competitor Swiggy are neck to neck. Amazon is also expanding in this space and is a huge threat. The third factor you should consider are issues with restaurants. Zomato has a fragile relationship with the National Restaurant Association of India. Recently, the NRAI has approached the Competition Commission of India and has highlighted how they have been affected inherently by the anti-competitive practices of aggregators. We have done a whole podcast on this topic. Be sure to listen to it. The link is in the description box below. So, what should you do? Long-term investors can wait before investing in Zomato. Participating in this IPO may be very tempting as Zomato is India's first unicorn to hit the capital markets. But it's better to wait and watch.